Hey everyone, welcome to another episode of Taking Stock Live. I'm your host, Kalila Reynolds, here with you for another week, talking about the latest business news and how it affects you and your money. Well, there's a lot to discuss over the past several weeks. A lot of things have been happening in the business community and in the financial sector. And so tonight, you have an opportunity to ask the analysts, what do you want to do about investing in this climate? Or what do you want to know about investing in this climate? How do you handle things? Lower interest rates finally coming, a new finance minister on the horizon as well, and several other things that are happening in the current environment. Tonight, it's all about Ask the Analysts. But first, I want you to let me know in the comments, in the chat, where are you joining us from tonight? Let me know in the comments what part of Jamaica or what part of the world, because we know Taking Stock is global. Absolutely. Also, give us a like, hit the like button, subscribe to the channel, and share with a friend. Let them know that Taking Stock is happening right now. And we're going to take a break. We don't have What's Hot just yet, but we'll have What's Hot in Business for you later in the show. We'll take a break and come back with our analyst panel for tonight. At an amusement park. If you don't give it money, is like a child at an amusement park. If you don't give it some rules and tell it exactly where to go and what to do, it's going to get lost and in trouble. If you've ever found yourself wondering, where did all my money go? Build Your Budget is for you. If you've been trying to plan for a big purchase but feel like you will never get there, Build Your Budget is for you. If you need a flexible spending plan, Build Your Budget is for you. And if you're spending more than you earn, Build Your Budget is for you.
And ever since downloading that budget and actually applying it, I paid off my credit card, I paid off my tuition loan, and I bought my first pair of Tory birds. And it was in the budget.
How important it is to budget, how important it is to plan your money, to tell your money where to go, and how important it is to hold yourself accountable.
So, are you ready to accept this mission? Click the button below to get started. So just letting you know that our live Build Your Budget workshop is coming up next week, Monday, September 9, and it is free. The link is in the description. So sign up today because space is, well, it may be limited depending on what platform we end up using. So I want to see you there next week, Monday, live. Last night was money mentorship inside the community as well, and that was pretty awesome. We had a lot of entrepreneurs in the program last night, or in the community last night, talking about business tips, business advice. How do they start their business? How do they grow their business? A lot of great conversation happened in money mentorship last night. Now, before I introduce our analyst panel, let me encourage you to start leaving your questions in the chat. Every week we do this show, and there's some questions that I don't have time to get to. So now is your opportunity. What do you want to know? What would you like to ask the analysts? Start leaving those questions in the chat. In the meantime, let me see who is joining us. We got Sean ready and waiting. We have JT in Cayman Islands. Nanosense is far, far away. Strong Link is in Upper St. Andrew. Did I say it right? Upper St. Andrew. Orville is tuning in from Spanish Town. Chris is in Panama City, Panama. Humble Boss is in Negril. Life Roots is in Montego Bay. Robert is in Maypen. He's saying, hope your light is back in Mandeville. Good while, Robert. It's been probably about a month now since we got back light. Fortunately, maybe a little bit more than that. We have Simple Knowledge in Cayman. Sean is in Mandeville. Roswell saying good evening to everyone. Roger in Philly. Ingrid is in Bull Bay. Michael is in Portmore. JT all the way in Dubai. How is it in Dubai? And Mr. Brown in Cayman. So shout out to all our viewers all over the world tonight. Now let me introduce our analyst panel. Let's see who we have this evening. Starting with Corporate Manager of Group Client Portfolio and Investment Strategy at JMMB, Leovani Dillon.
Yes, good night.
Hey. Business writer at the Jamaica Observer, David Rose.
Night.
and founder of Wealth Watch, J.A. Julian Morrison. Welcome, guys.
Hi, Kalila.
Where's
Good, man.
Julian?
Audio only so far.
Julian chip out. All right, he'll be back, I'm sure. So,
Yeah.
David and Leo, we had some topics that we were going over with you guys before Julian jumps in. I'm going to start with you, David. We're looking at KPREIT, Kingston Properties, and they're actually buying more properties in downtown Kingston. Why downtown specifically?
Well, buy is a very defined term. So they didn't specifically purchase, property in downtown Kingston to that effect. What they did was that they did a sale and lease back. So yes, it will show up on their books, as real estate on their books when they next report numbers come through, which would be around November for the Q3 period. However, it's a sale and lease back transaction. So effectively, VM Real Estate, which would have been the owner of those properties, would have agreed to sell these assets over to KPREIT and pay a lease over a defined time period. At a particular period in time, KPREIT has, VM Real Estate has the right to actually purchase properties back from KPREIT at a escalated price in a sense. So it's, a pretty decent deal because it's in this scenario, they're using a fully tenanted property with likely built-in release increases in the future, and you're talking about the offices of KPMG and VMBS, VM Building Society, 6,000 square feet, pretty good deal. And KPREIT, has been shifting more of its business back towards, Jamaica over the last, call it 6 to 8 years. So 2016, KPREIT would have had about 70% of its real estate portfolio in the United States of America. Now, following the most recent downtown acquisition and the sale of, some units that they had in the Cayman Islands for one particular property, they're, at 49.6% in Jamaica, 43.5%, with respect to Cayman Islands, and 6.9% for the USA. And most of that USA real estate is held through funds, nothing that they're directly managing. I know the company would have just recently took out a $5 million loan from CIBC Caribbean Bank to acquire the investment property. We're not sure that deal with that financing is going to be used specifically for the UK deals that are coming up that they're looking to execute on, meaning United Kingdom, or it's for the recent deal they did with VM the VM real estate business or real estate subsidiary. So sale and leaseback is not necessarily uncommon. Last September, we would have seen April Property Fund, Value Fund, sale and leaseback with JN Bank. We heard recently about, Grace Kennedy doing a sale and leaseback agreement with ICD Holdings in downtown Kingston. So, in this case, it's more so the owners of those real estate properties are effectively monetizing more of their real estate and creating, greater value in a sense by taking that cash to use for their own purposes, whether it's through new deals or other potential opportunities. But it does create some more flexibility in how they optimize and use capital.
So, what type of properties are we looking at downtown? I remember, like, who's making all that noise? I know where the noise is coming from. Yeah. I remember like 10 years ago, there was this talk about the downtown revival, and some of it we have come to see with the waterfront. We see Victoria Pier, we see Digicel down there, we see the Rock Hotel down there. Is it in that vicinity where we're seeing these investments from KPREIT?
Not necessarily on the waterfront, a little bit more back on Duke Street. So where VMS is on Duke Street, along that point also where where KPMG's office is, along that stretch of downtown right there, the same street where, Scotiabank could have had its first branch in Jamaica. So along that stretch right there, but there is a lot of, investment happening in downtown because we can look at the Ministry of Foreign Affairs having its HQ, next to the
Right.
JST. We can look
Grace Kennedy right next door too.
And remember, they have just built their global HQ right there in downtown, and I benefit from some of the tax credits that were offered in the past. Digital global headquarters here in Jamaica. You know, Panjam owns the Scotia Center in downtown where Scotia Group Jamaica's HQ is. And we even seen, I believe it's Peter Issa, working to develop, some of these older buildings into lease-ready properties for some businesses that want to be in downtown. Because one of the relative benefits of downtown Kingston versus, New Kingston and other surrounding parts of the urban area is that if you look at downtown, that space, is relatively less occupied, and there's more flexibility in how, some of these properties can be redesigned or remodified. And somebody mentioned just a while ago the BOJ looking to build a second tower at the waterfront effectively to house, the big operations of their expanded role in the coming years.
So, Leo, let me bring you in here. Do you see potential downtown? Because I feel like the politicians every so often make this push for the revitalization of downtown. I'm not sure that it's quite materialized, at least not yet, the way that they would envision. Do you see it happening in the next 5 to 10 years?
I mean, I think it's possible. There's been a lot of development there. As you said, probably not at the level that was expected initially, but it is coming along. I think, of course, to that point, of course, the higher interest rate environment that we've endured for some time now wouldn't have helped the situation in terms of the growth that we'd have seen in just the general construction sector, and of course, by extension, excuse me, by extension downtown. So I think that would have kind of slowed down progress a bit. But I mean, with these things, it can take time. So I think in the next 5 to 10 years, you're gonna continue to see some development on that front. Again, probably not to the degree that the government would probably want to see, but I think yeah, I think that development will continue. I think the incentives is one that would bode and push persons into that direction in terms of corporate clients and sort of build uh, uh, headquarters downtown. So I think it will push ahead. Lower interest rates though will definitely help that initiative.
But David, are the concerns about crime downtown still valid in 2024?
Well, the reality is Jamaica is just a pretty rough place, and the truth of the matter is, you had persons who had similar concerns about New Kingston at different parts of that space. Persons are being robbed and so forth. Theft and crime is still there, but probably not to a higher degree. And even then, we still have to remember you're talking about a space that might not have as wide a road passage and roadways compared to a New Kingston, for example, but you're still talking about space that can be optimized and used. Like there are persons that are looking right now to try and see how car parks can be built in downtown to accommodate all those vehicles, and that's to kind of show you that persons are looking outwards in the rest of Kingston, because we're seeing, for example, the 10-story building across from Jamaica House on 45 Hope Road. We're seeing a 20-story residential property on 10 Waterloo Avenue near Devon House. We're seeing another 4-story building going up on 5650 Lady Musgrave Road, another commercial property at Trafalgar Road, near AC Hotel. We're seeing even Image Plus Consultants Limited, Apex Radiology, planning to develop a real estate property in front of AC Hotel. So there is a limit, in terms of concentration as to where, you're going to have your options. And the truth of the matter is, whether it's Kingston or Montego Bay, someone is going to still need space. And there is going to be different, benefits and disadvantages to each area. Because we should remember that, the Grace Kennedy benefited from, some of the tax incentives that the government have pushed to, build their downtown HQ. And we should also remember that with downtown, there's just so much that can be done. It's really just, for some of the landowners or the property owners to, just sell for development to take place. Because I'm sure somebody will be very glad to, buy out a couple of these properties on one stretch and just develop it into a proper parking lot or into a proper commercial office space, because even the Ministry of Finance, mentioned that TAJ purchased Scotiabank from a Duke Street to property they're trying to turn into a tax office. So spreading out that level of commerce, in different areas of the Kingston St. Andrew area does benefit, the populace. So they have to bungling up at one particular point. And also, it does create more economic opportunity in the same area, because when there are more persons going into that area to, do business, they have to get food. They have to probably, get medicine. So all of this does bode well, for the surrounding downtown community and its potential environs.
I see Garvin says Issa Construction's doing a lot of redevelopment of old buildings in downtown. I see Julian is back with video. Hey, Julian.
Hi everyone.
So let me ask you straight up, would you invest in downtown right now?
Okay, so I think there's a lot of scope for downtown. There's a lot of potential, especially for commercial and industrial assets, because downtown was designed for commerce. So the fact that some of the roads are one way is not accidental. So there's a lot of infrastructure there that is conducive to commerce. It just needs redevelopment. So Jamaica Chamber of Commerce has a downtown redevelopment committee, and I actually just applied to be on that committee. So maybe on a later episode, I'll have more details for you as it relates to downtown and the downtown redevelopment plan. But I know there are efforts by the Jamaica Chamber of Commerce to sell the idea to the private sector that the continuous development of downtown has a great multiplier effect in terms of wealth creation and the social benefits that are twinned. So I think there's massive scope. I have a bias because I've been looking at downtown a long time, but I do think from an objective standpoint and in terms of the data, redeveloping downtown is a need. So let's put it into context. It's very rare to drive economic growth in any country without involving the capital. And many places we call Kingston today is actually not Kingston, it's St. Andrew. It's a part of the Kingston metropolitan area, but it's actually not Kingston. Kingston Parish itself is still very much underdeveloped with a lot of distressed assets. So I think through joint ventures, public-private partnerships, using funds like strategic funds that have very long investment time horizons are different avenues that we can use to fund the redevelopment of downtown. So the sewage system, updating some of the roads, building out parking garages, as David mentioned, so that it can become more of a district. It can become a lifestyle area. Persons can feel safe. They can just park and walk and shop and just basically carry out business.
All of that time, you still don't answer the question.
I do. I would.
You
I
would
just
invest
mentioned
in.
how. Yeah, and I was
Okay.
saying that I'm biased because I just applied to the committee.
Right.
But I'm saying objectively, there is a standalone case.
Raquel says Julian laugh as the small man can't afford downtown right now. Well, there's still areas, not the whole of downtown. The other concern is what people have been saying is that, well, all the wealthy people are going to buy up the land downtown, leading to gentrification. And then the people who currently live there won't be able to afford to live there, and they become displaced, which is a risk that indeed you do run when you try to redevelop an area such as a downtown Kingston. I'll throw that one to Leo.
Yeah, I mean that is a risk. That's something that happens, everywhere. In the U.S., Jamaica, globally, it is something that can happen. However, there are things that can be done in order to mitigate that. In terms of different regulations and rules that can be used in order to control the pricing and to carve out areas. So there are means to go around that. But I think the opportunity of development is one that it would warrant taking that risk. And again, you have safeguards that you can put in place in order to mitigate that. So I think it's something that can be dealt with.
All right, let's move on to the next topic. We have a few questions in the chat as well, but I'm going to leave those for after the break. And so our next topic this evening is about the falling interest rate environment and how do we reposition our portfolios now that things are starting to change. So Leo, once again, it seems like interest rates are finally trending down. The Federal Reserve in the US has given indications that they're going to start cutting rates. And of course, the BOJ also did a small rate reduction. How do you position, or how do we position our portfolios in this environment?
All right. So how I'd like to take this answer that question, I'm gonna give some context. So first of all, as you had said before, there's indications that the US is like to start cutting. So since August 2023, basically rates peaked there at the band 5.25 to 5.5%, right? Now the indications in the market, if you're looking at the pricing of the interest rate instruments in the US, they're expecting a 25 basis cut come their September 18 meeting, right, of their Federal Reserve members. Now, when that happens, the expectation there is that there's I think around 68% chance that you're gonna get a 25 basis point cut, and then the balance of that now is a 50 basis points cut. So the bulk of the probabilities is weighted towards a 25 basis point cut, right, in line with, of course, what you saw happening here, right? Now, interestingly, what the market is expecting is that come by December, though, the market is pricing in like a 96% chance that come by December, you're going to get at least a 75 basis points cut. So it could be steeper. So that's what's currently being priced in the US market. Now, the reason why that's very important is, of course, we know that our BOJ, how they set their policy rate is that they're mindful of the spread between our policy rate and the US policy rate. So the idea is that you don't want that spread to narrow too much, or it can result in excess pressure on the currency in terms of devaluing the Jamaican currency relative to our major trading partner, the USA. Right, so they're mindful of that spread. Now they did move first, cutting it by 25 basis points, with slightly narrow that spread. But the expectation by the market and in general is that that September cut is a foregone conclusion. So when that comes in, then of course the spread will remain as it was before, right? Because if you get that 25 basis points cut, then you get the same spread. But that increased cut going into December from the US Fed would create additional room now for our BOJ here to make cuts without narrowing that spread. So I think that bodes well for interest rates going down in the near term, as in like for the Jamaican BOJ here, right? So that's good. So the Bank of Jamaica. So of course, once that happens, that filters through the entire economy. Of course, there's some lagged effect. Now, I give that backdrop to say this. Now, the interest rate cut now is very important because, as we know, when you're looking at, for example, fixed income securities, right? So that's your bonds, that's your probably loans, depending on how you trade in terms of that's a private security thing. But those fixed income type instruments, right? They are the ones now that can benefit from that because, of course, because of how these instruments are priced, it's just the math of it, right? When interest rates come down, the prices go up, right? I mean, if anybody wants to explain that, I can explain, but the nature of it is just that, right? In simple terms. Now, that now, of course, would feed into boosting the values of like any secure company. So, for example, different banks and financial institution that has these fixed income instruments on their balance sheet, the value that's gonna go up. I'm gonna speak more to that later, right? Also, when it comes to equities, right, the lower interest rates would reduce that competition basically that exists between buying fixed income securities and buying equities. Because what will happen now is that when the yields come down, the valuation of equities tend to go up because what's happening, different factors, but one of the factors that's happening is that persons are looking to generate a certain kind of return, and if fixed income instruments not generating that return, they're more likely to look into riskier assets to try and get that return. Also, it just boosts valuations in the market, and of course it also helps the companies, because if the companies, which a lot of companies do, have debt, when those debt reprice in terms of they refinance those debt, you're going to refinance at a lower rate. So all else being equal, you get a higher profitability just because you have a lower finance cost. So that's good for the companies there. Now, So all in all, the on the macro level, 'cause again, it would tailor to individuals depending on their investment horizon and all of that. But on a macro level, how you could look on it is that to take advantage of the lower rates, what you want to do on the fixed income side is that you want to buy securities that are more sensitive to the rate changes, right? So those are securities, for example, longer tenors, or securities that a lot of the cash flow is not in the coupon payments, but more on the maturity of the note. So those are the type of securities that you want to probably look at in order to take advantage of a decline in interest rates, because those securities, in terms on the fixed income side, are likely to see the biggest gain in value. Those kind of securities, right? Now, on the equity side, what that means, as I alluded to before, is that you're going to see better performance, for example, coming in from the financial companies. So, as we know, a lot of the financial companies have been under pressure because the higher rate environment reduce their net interest income. So that's basically they make interest income from the loans on their books, the investments on their book, and then there's an expense that's associated with a lot of those, whether it be the company itself taking loans or some interest expense associated with its operations. The rates on those higher, and it narrowed that spread. Now, as the rates come down, that spread will widen out, and then that now will lead to higher profitability. Also, as I alluded to before, the assets that they already have on their balance sheet in terms of securities that they already own, the value of those goes up, right? So that's also good for them. So the financial companies are likely to be big beneficiaries of any shift in the rates right there too. And of course, the general equity market is likely to benefit. Now, of course, as it is with all time, just as we see now, even in the doldrums, you do have individual securities that are performing well. It's the same way that even when the market is going up, you're still going to have individual securities that are not doing so well. But in general, you're likely to see some movement there on the equities, especially on those high value equities that are just kind of beaten up in terms of valuation, but the company themselves are doing well. So I think in general, that would be how you want to position your portfolio. And again, that's a high level thing, because on an individual basis, it would have to be tailored according to their risk tolerance and their investment horizon and all of that. But at a high level, that is what you probably want to be taking a look at to take advantage of a declining interest rate environment.
David, we've been talking about interest rates for a while, probably all year, from last year on this show. Do you agree with Leah's assessment of the type of positions we should be taking now?
Yes, correct. And if you actually look at the BOJ Treasury bill results, it kind of speaks the same volumes. So what I'm talking, sorry, Treasury bills, apologies, certificate of deposit, CDs. So the BOJ hosts a weekly CD auction every Wednesday, right? So you bid, your particular desired yield. If you come below the yield, the average yield, or the apologies, but come below the bid rate that was for a full allocation, you get your full yield. And that, is a 30-day CD. So in your 30 days, you get back your money, or you just tell your investment bank or primary dealer in this case to roll the money. But basically, in the most recent auction, either last week or the prior week, the BOJ cut rates August 21, so that would have been 2 weeks ago. The day after the BOJ cut rates, their CD auction was looking for about, I believe it was 59 billion Jamaican dollars, right? That auction got about $89 billion. So think about that for a second, Kalila. A company like Wisynco had $10 billion in cash on their balance sheet last year. That's just Wisynco. You have probably the NCB Financial Group, having cash on their books of about 160 billion. So that's just to give some quantum of how much money is now chasing these longer dated higher rate instruments. And we'd have seen just in the last week or in the last couple of days, Mayberry Investments Limited, mentioning that they are upsizing their bond offering, based on the demand that is there. And it's because of the fact that investors who participate in the low interest environment, they either try to benefit by participating in Mayberry securities, or just keeping a short tenure on those instruments. Now, with rates relatively coming down, what's going to happen is that everybody's who didn't take a position already is now trying to find a place to park that cash to benefit from these higher rates. Because put it into perspective, right? You would have had like a JMB group, for example, that would have issued debt back in 2016, 17 at 6-7%. And when they had to refinance, 22, 23, that refinancing around like 12, 13%. Now, for someone like me, I'd be like, hey, I don't mind taking 12, 13% fixed, because for some persons, they're looking at a relatively stable, consistent coupon payment, and come on to maturity, the issue is likely to either refinance or, find some means or capacity to actually repay. But in most instances, it still works out, because when you think about Versicon, even if they account for withholding tax and interest, you're still talking probably about, let's just say, about 12, 13%, rate. You're still talking about, probably 9, 10%, after withholding tax in just returns and from interest perspective. And for some persons, they are not going to be able to find, those kind of relatively high returns when rates come down. So you're likely going to see, more companies try to issue some debt, on shorter tenures to try and refinance in the coming periods. And persons are going to take advantage of it to, benefit from these relatively high rates. Because if you look at different companies in the market, with some of them still having their debts being carried over from, the older periods, they benefited tremendously. So for example, NCB Financial Group, they issued, a bond back in, I believe it was 2019 at 6%. Now, that 6% sounded nice, but when rates are going up through the roof, persons were just stuck holding at 6%. Now, NCB is refinancing between 11.5 to 12.5% between 2 to 7 years, of 10-year periods. Now, as somebody who gets back their money from these maturities, I can benefit, for the next 7 years guaranteed, by any company, that issues these instruments or fixed income instruments surviving, a consistent income without, relatively much risk depending on the nature and type of a company. So, you're going to have to be very conspicuous and careful, because on one hand, yeah, the equity markets and other asset classes are likely to start to rebound in short order as rates come down and make, certain asset classes a lot more accessible to some persons, since the cost of financing will go down. But at the same time, there are persons who are going to be looking at the fact that, hey, I want to get that consistent income because I know this company is great. They need to, get this money to refinance or anything like that. And it makes sense for me to take advantage of their need to refinance at these higher rates and lock in a great rate. So it will come down to your portfolio management, but in all honesty, you have to just be circumspect between liquidity, needing to be able to see opportunities or take advantage of opportunities as they come along, and also seeking consistent returns.
All right, we have a lot of questions in the chat, and I want to come to them. But first, let's go to what's hot in business.
But first, here's What's Hot, brought to you by JMMB Group, your best interest at heart. Pharmaceutical distributor R.A. Williams officially listed on the junior market last week. The company raised $400 million from its initial public offer in July. According to the Jamaica Stock Exchange, $10.5 billion has been raised from the IPOs since the start of the year. R.A. Williams had a rough opening week, sliding 28% to close trading at 72 cents. Jamaica Broilers Group recorded a 13% boost in net profits for its financial year ending April 2024. According to the company's results, the poultry provider made $6 billion in net profits for the year. Revenues were also up 2% to $93 billion for the year. JBG took a $900 million hit in 2023 after winding up its operations in Haiti. The company operated in Haiti since 2010, but decided to exit the market because of the country's social and political instability. Tier 1 tickets for dancehall artist Vybz Kartel's comeback concert Freedom Street sold out hours after they went live. The ticket prices ranged from $125 for seats in the bleachers to $10,000 for luxury pods trackside. The concert, which is scheduled for December 31, will be Cartel's first concert since being released from prison after spending more than a decade behind bars. Concert organizers Down Sound Entertainment said partygoers who did not snag tickets over the weekend will have to wait until another ticket launch. Chip maker Nvidia and tech giant Apple are reportedly in talks to participate in OpenAI's next fundraising round as the company comes under increasing pressure. OpenAI is reportedly on track to lose $5 billion by year end as the company expands its AI training and staffing. There is no word yet on the stake Nvidia and Apple will take in the company or how it will affect current shareholders. However, Microsoft, which already owns 49% of OpenAI, is also rumored to be interested in this second round of fundraising. What's Hot was brought to you by JMMB Group, your best interest at heart.
Do you hate budgeting? That's because you're doing it wrong. I'm Kalila Reynolds, founder and CEO of Money Media, Money Made Simple. Join me on Monday, September 9 for a free budgeting webinar. I'll tell you the 5 most common budgeting mistakes and how to fix them. Let's get this money. Interesting there in What's Hot in Business. Who's going to the Cartel concert? Let me know in the comments. I feel like it's sold out so quickly. I feel like a lot of international people bought those tickets. Like people from all over the world are going to be flying into Kingston. But what do you guys think? Are you going to the Cartel concert? That's not our poll question, however. Our poll question for this week relates to the CSEC results. So here it is. What do you think was the reason behind the poor CSEC results in Jamaica? So here are your options. A, lazy students. B, teachers not doing their jobs. C, too many distractions. D, COVID, because COVID, CSEC, yeah, these kids would have been like in first form when COVID came around. So that would have had a big impact, I think. Or E, other, leave a comment. What do you think was the main reason behind the poor CSEC results? You can take that poll over on Twitter or on the community tab of our YouTube channel, or you can just leave a comment in the chat and let us know what you think was the main reason behind the poor CSEC results this year. Up next, we've got your market recap, and we'll come back with your questions for the analysts.
$126 stocks traded across the main and junior markets for the month. 52 made gains, 66 lost value, and 8 stayed the same. 662 million shares changed hands on the Jamaican dollar market, valued at $3.1 billion. Now here's a look at some of the highlights for August. The main market and the manufacturing and distribution index both went up slightly last month, while the financial index dipped 0.5% and the junior market was down by 3%. Now let's see who had the biggest gains for the month. Key Insurance was up 36% to open September at $2.79, and Innovative Energy Group was August's third biggest gainer behind Radio Jamaica. The stock was up 28% to start the month at $1.13. On the losing side now, KLE Group was last month's biggest loser. It lost 32% to open the new month at $1.50. Cargo Handlers lost $3.46 to open September at $8.03. And the newly listed Ari Williams fell 28% from its listing price of $1 to open September at 72 cents. Over on the Trinidad and Tobago Stock Exchange, the composite index lost 52 points or 5% last month. Massey was the most traded of the month. It lost 10 cents to open September at $3.50 TT. Unilever Caribbean was the biggest gainer, up 9%. It opened the new month at $3 TT. On the losing side, Trinidad and Tobago NGL was the month's biggest loser, down 24%. Over in the US, the Dow Jones gained 4.5% in August, while the S&P 500 and the Nasdaq were up 5%. Motorists scored some wins at the pumps last month. The cost of 87 gas fell $3.47, while 90 was down $3.44. Meanwhile, the cost of regular diesel lost $3.55, and low sulfur diesel lost $3.37. In foreign exchange, overall the Jamaican dollar lost 29 cents against the US dollar in May, closing the month at an average $158.03 to 1 US. The JMD also weakened against the Canadian dollar and against the pound and euro, with the pound losing $1.69 and the euro losing $2.51. Finally, on the crypto markets, Bitcoin prices fell 9% over the last 30 days, trading at $58,466 US on Monday, while Ethereum was down 20%, trading at $2,518 US on Monday. This segment of Taking Stock, The Analysts, is brought to you by JMMB Group, your best interest at heart. Disclaimer. This is not intended as financial advice. Please consult a licensed financial advisor before making investment decisions.
Welcome back. Let's get into your questions now. And I see a lot of questions coming in the chat. But before we get into the questions from our audience, a few responses to the CSEC question, our poll question. Paper plate saying A, B, and C. So basically all of the above are reasons for the poor performance. Strong Link also says all of the above, and so too does Garvin. All of the above re CSEC. So yeah. Philip commenting that Cartel concert may be good for Main Event Entertainment Group. Maybe, he says. And I think I saw another comment read that one as well. Raquel says, need an Airbnb in Kingston for the Christmas. Good idea. Renovate that room right now. Renovate that property right now, because space will be a hot commodity in Kingston come December 31st. Yes, indeed. Like I said, I expect a lot of people to be flying in for this show. Kai says, the way things are, more attention will be on hairstyles versus actual causes for the suboptimal performances. Wow, Kai, you have no faith in Mr. Vibes Cartel? No faith at all in the performance? I do share the concern about his health, though. Like, I don't know, is he capable right now of performing a full concert? And what will the quality of that performance be? There are people, though, who won't care. They're there just for the historic nature of the event, for the FOMO, and etc., etc., etc. Me personally, I highly doubt that I will be going. I have no plans to go, but who knows? I didn't plan to go to the Buju concert either, and then at the last minute, the day of the event, the FOMO hit me, and I ended up going. So who knows? All right, let's get into the questions. Welcome back to our panel, Leo, Julian, and David. Let me start with Philip, who had one of our first questions. I'll throw this out to Julian. Philip wants to know, how's the rest of the year looking for local equities?
Well, local equities will take a little while to turn, meaning breaking out of the cycle of sluggishness, because it's very early in the change in the monetary cycle. So when we talk about monetary cycles, we're talking about an interest rate hiking cycle where the policy rate is going up based on the central bank's actions, or a cutting cycle where the central bank does the opposite and cuts interest rates. So it's very early, and we need to put some context into it. The impact of Hurricane Beryl has not filtered through to inflation results as yet.
Oh,
So
really? Maybe not the official results, but it sure has filtered through to the prices that we're paying.
Yeah, for sure. So remember, CPI is it's lagged, and it's also a basket. So it's biased by what is in the basket, so it doesn't tell the full picture. But BOJ typically relies on this indicator. So the August numbers and the September numbers, which should come out in September and October respectively, could see interest rates reaching the 6% range or even above, which is the upper end of the
Interest rates or inflation? You mean
sorry,
inflation?
inflation, I meant to say inflation policy range. So the target range. So what that means is that it might not be a full-blown cutting cycle. It's not likely that we're going to see a 25 basis point cut back to back to back to back to back month over month, which is what some persons might anticipate. It might be more staggered over a longer period of time. And the knock-on effect is that sentiment will take longer and longer to turn. Let's just put it into some context though. 2024 has already seen two IPOs so far, and the response to those IPOs have been much less favorable than what we've seen in the recent past. So it means that IPO activity in and of itself doesn't just test sentiment, it hasn't really turned sentiment that much, which is something that's fairly new for us. To see two listings come in 1 year and for it not to, either of them not to be responded to favorably compared to what we're used to in a bull cycle or even as recent as the pandemic years. That's number one. Number two, several companies, especially in the manufacturing space as it relates to food, they have seen earnings outperformance, especially the companies that have been able to keep interest costs low. So those companies that were able to manage their balance sheet and conserve their cash and yes, continue to build out and have greater manufacturing capacity or acquire other firms, but still keep their interest costs low, they've done better. And even though these companies have done better and have continued to pay dividends, sentiment still has not turned for the better. So I think we need to extend our time horizon. The good news is I think that the market is now a buyer's market in terms of PE multiples across the board. We're seeing some of the lowest valuations, I should say, some of the lowest valuations we've seen in several years. I can speak for myself at least. The last time I checked the market PE, it was market average PE. It was much lower than it has been in the last 5, 6, 7 years. So it's not just about prices or how fast the price might rise, but looking at it as an opportunity to say, okay, in the next 3 years, will I be able to pick up these companies at these valuations, given that the leadership is the same, the competitive advantages are the same, which are things that are not likely to change. So on balance, I think for the local market, it's a buyer's market, especially for companies that have better fundamentals. So that speaks to leadership, the business model, the track record, type of products, the vision. Is it that they're breaking into new markets? Do they have the right product mix, etc.? So it's a matter of seeing an opportunity that doesn't have a red bow tied on it, because we can't always wait for everyone to see what is in front of us, because sometimes if you wait on the crowd, then it might be too late or not generate the returns you could make.
Absolutely. Next question is for David. It comes from Sasha. Sasha wants to know, will the rise of BRICS affect the US dollar?
Not necessarily for some time. And you have to just be realistic. The global economy still runs on the Western powers hegemony. Hegemony.
Hegemony.
Thanks. So I don't remember the specific number, but I think about 65% or more of the global transactions are still in US dollars. Like the fact that most of the US dollars in circulation are not held in the United States itself kind of tells you how much demand and value there is for the US dollar in the global sphere. Don't get me wrong, it does put some level of challenge towards, the dollar's dominance it has had since World War II, but at the same time, it's very hard to break away, from the US dollar for several reasons. One of the simplest reasons is just confidence and stability. So, for example, if there was a BRICS currency, right, and let us say this is before 2022, and Russia went in and did what they did with Ukraine, how would that have affected confidence and stability in that united BRICS dollar? And it's a serious question. How do you disrupt the USA off their pedestal if you cannot maintain confidence to anybody in the public domain? And that's just the biggest thing. Like, why am I going to give up my good US dollars and I do not know if all it takes is just one little person saying something bad or whatever for a war to start nowhere and for my currency to become less valuable? Because we should remember, Russia is still a major global player, even under so many sanctions, still exporting a ton of oil to Europe, just as much as before the war. And at the end of the day, it, not using US dollars for like a Russia, China, India, and so forth, it does come with its comparative advantages. They get to negotiate better deals. They don't have to go through, certain constraints that come with holding US dollar. And at the same time, the Russia-Ukraine war, has exposed some of the faults that come, with that US dominance. Because the person they just saw USA, freeze Russia's assets overnight, which is one of the concerns that comes with, that kind of dominance and over reliance on the global reserve currencies.
So next question is for Leo. I'm going to try to take them a little bit more rapid fire now because we have a lot of questions. So Leo, this one comes from Nano Sense, who wants to know, what effect does the closing of SSL have on the market?
All right. So initially when it happened, of course, it did hit sentiment. But I think the overall effect though is somewhat limited because of the size. So the thing with SSL, it was more of the publicity of it on how it unfolded was the bigger problem. Because if you look on the company and the assets and everything as a percentage of the overall industry, it was relatively small. So that's the thing. So I think, yes, it did have a negative impact, but I don't think it's one that warrants a lot of concern per se in terms of the overall stability. And the good thing is that there are some policy changes that came out of it, which would, of course, further strengthen the sector. So on and on, I think in the long term or in the medium term, everything will be fine.
Question for Julian. So we're taking them quickly, David, because I have many questions to go. So Julian is next. Question from One Coco Investor. Since IPO flipping is a thing of the past and there's not much stock appreciation in this climate, what would you say are the 6 best stocks in Jamaica now to build a dividend growth portfolio? Bearing in mind, guys, standard disclaimer, this is not investment advice.
Well, the key is when we're looking at stock price appreciation, the upside is based on 2 things. It's based on, number one, having a margin of safety, and number 2, investing in assets that have a catalyst. So let's unpack that a bit. When we invest, returns come from sources. So it can come from interest rates falling and a rising tide lifting ships, all the ships on the market. So both the good, the bad, and the ugly tends to appreciate. There can be a change in leadership, and that increases the confidence in the asset. It can be a continuation of or an improvement of fundamentals, so the asset can generate more cash than it did in the past. These are 3 different sources of return that can cause assets to appreciate. So you need to assess each asset on its own merit. And not only the merit, but what timeline these catalysts will play out. So if I know that, for example, Wasinco has difficulty supplying the local market to its fullest potential to this point, meaning that them not have hand for sell water, doesn't mean that it's a case for me to not look at Wasinco right now for where sales could be in the next 2 to 3 years. Because remember, equities are inherently medium to long-term investment opportunities. So sometimes just because the monetary cycle doesn't favor equities right now, it doesn't mean that there is a case for equities still. Again, we're framing the conversation to say these are very attractive entry points for several assets that should be at a higher level based on what has happened in the past and what we know about them in the next 3 to 5 to 6 to 7 years. Some of us have kids in school, some of us have education aspirationals. Sorry, educational aspirations. Sorry, guys, I'm tired. So we need to align our outlook with some of these things. But as it relates to dividends, Scotia looks good. Sagicor looks good. There are some companies that are attractive too. Outside of the financial services space, there's Montana as well. There's Image Plus. I think Image Plus has high free cash flow capacity and potential in terms of what they're going to do in the future and the information that's available. But I think I'll stop there. There are a couple others. We just have to look at the dividend yield and again, the source of the returns. So is it coming from core activity or is it that they sold a large asset and they have a one-off gain and they just want to pay that one-off gain from the sale of the assets in a dividend? So we'll have to look a little bit more critically at where returns are coming from and the type of returns we're getting, and also looking at the future because investors buy the future, they don't buy the present. If you find that you're very caught up in the present, then we need to take a step back and assess our situation as investors.
Absolutely. Absolutely. You need to have a outlook. If you're buying for the present, you're too late. Too late.
So Sean, medium to long term. Oh, sorry, Kalila. Oops. Oh, sorry.
Oh,
I'll let you go ahead and assign them.
well, yeah, you can answer. What does medium to long term mean? How many years are you looking at or months? What
Okay,
time period?
so again, we have to step back. You have what is called the life cycle. And as it relates to all our financial activities, we should be acting in accordance with our life cycle. So if it is that I am in my 30s, then statistically I'm likely to live for another 20 to 30 years. So how should I structure my portfolio within that context? What's my earning potential based on my profession, based on my upskilling, based on my networking, based on the industry I work in, all of these things. So medium to long term is more so contextualized by where I am in life and what my goals are and what I want to achieve next. So that structures my portfolio, my cash flow needs, and what they're likely to be in the future, and also my risk tolerance. So, okay, I might have my long term is 30 years for argument's sake. But if you're in your 50s, statistically, you may have 15 years left. Your long term might be 15 years. So my 30 and your 15 are not comparable because I have twice as long as you, but they both can be classified as long term. So it's like you really have to drill down on where you are in life and what you plan to achieve and all of these things. So
Okay.
medium term generally is between 3 and 5 years or longer. But again, you really have to go back to life cycle planning. I don't know your age, Sean.
Okay.
Can't answer that.
Next question is for David. It comes from SN Nightcore. He says, I have some TJH, or she says, I have some TJH preference shares. Is there a thing where they could be converted to ordinary shares after maturity? I think Ivan Anderson is the person to ask, but is there such a thing? Do you know?
So just for context, to keep it simple, most of the shares in the J's that people know and trade are ordinary shares. They give the right to a dividend, you have your voter right to the AGM. Preference shares are structured differently, just about ordinary shareholders. They get a guaranteed dividend, don't have voter right to the AGM. Sometimes they're structured as liabilities in a sense. And in the case of Trans Jamaican Highway, they have an 8% preference share, which is supposed to mature in 2028 at either $1 US or $1.41 JMD. I didn't see the original term sheet, but it's a cumulative redeemable preference share, meaning that any unpaid dividends are added back to basically ensure that you get paid effectively at a future date if the company misses a payment. And redeemable means that at the end of the maturity period, the company must pay you back at the agreed price that what the shares are issued at. So technically speaking, if you got the preference shares and let us say maturity comes you want to get ordinary shares, you would have to take the proceeds of that preferential maturity to then buy TGH ordinary shares. If the preferential shares are a convertible feature now, then the possibility will be there for you to convert the preference shares to ordinary shares. But that doesn't exist with the preference shares that are an issue right now. They are more so akin to a liability or debt than a form of equity than what we typically know.
Okay, let me take one from Instagram from DarkPaw69. This one is for Leo. What's your opinion on the Mayberry bond that is now being offered?
Okay, all right. So that Mayberry bond. All right. So I haven't looked on the terms of it. I haven't
I think
gone
it's like
to.
10.75% for 18 months. They have different tiers, but that's the one I can
Yeah,
remember off
probably
the bat.
different
Just
tranches. Yeah.
just one.
Oh, that's the one. Okay.
Oh,
But
it's just one this time. Okay.
yeah, man. But it goes a lot deeper than that, you know. So, for example, it's a secured offer. Okay, what's the quality of the security? So I haven't looked on it, so I can't speak to any of that. One thing that I will say though, broadly speaking, it is a public offer, meaning when I say public in this case, I'm meaning that it's a public company that's doing the offer. So the good news with that is that monitoring the performance, keeping on top of if they have any financial covenants, if they're breaching any of that or close there to breaching it, and how all of that's going, that's easy to do. So that would lean me towards having a positive outlook on it in that aspect in terms of the transparency. However, speaking to whether or not I haven't looked on it in details, because even if of course you had mentioned the rate, Kalila, but it goes beyond that, because even with the rate, how attractive is that rate relative to other instruments that's out there? I can't speak to any of that in terms of, because I haven't looked on the specific offer. So I wish I had something better to give you, but I haven't looked at that offer, so I can't speak to it in detail.
Next question is for Julian, coming from Sean. I'm a somewhat newish investor. I've never seen a bear market, so I'm not sure what's next. What signals can an investor look out for to know if a bull market has returned?
Okay, so everything is a matter of averages. So when we find the average PE for the market starting to go up, especially because of more sectors of the market showing upside in terms of the price, then we know that a bear market is coming to an end. So what do I mean? Let's say the index has 50 securities, and we find that on average, in a month, 50% of those securities trade flat for a given period, let's say a year and a half. And in the following year and a half, we realize that that amount goes up by a significant amount. Let's say it's no longer 50%, but 75%. You find that 75% of those securities don't trade flat, but they start to appreciate by 5%, 7% on average. So these are some of the things that will show you that sentiment is starting to turn. So not just what stocks start to go up, but the number of stocks that are going up. Another thing you can look at is the lows. So if it is that the lows are getting higher, meaning the 52-week lows are getting higher, that's another sentiment indicator. You can look at the 200-day moving average. The 200-day moving average, and we're talking about a simple average, is simply averaging the close price of a security over the last 200 days. You find that the 200-day moving average is going up incrementally for most stocks, then you notice that's a sentiment indicator. You can also look at volumes. So when you find that average volumes traded is going up on a consistent basis, especially across the board, not just for one security, that's also a sentiment indicator. So how many assets are starting to trade higher, not just in terms of price, but valuation. So that means that earnings is now starting to influence price more and more. Number two, we find that there's a greater amount of volumes traded for more securities, and not just a greater amount of volume, but greater volumes that lead to a higher 200-day moving average, that lead to a higher 52-week low, etc., etc., etc. So these are some of the things you can look at as it relates to sentiment.
Next question is for David, coming from Javon. Do you think locking in a bond rate of 12 or 10% may be better than investing in an IPO right now based on the market's appetite right now?
It all comes down to your personal preference and your outlook. And I say this very cautiously because we have gotten so accustomed to this IPO gold rush that as a result, persons have become relatively disillusioned to the reality that things can go wrong. So I did some research last week, wasn't 100, but did some research about up to Thursday, right? 14 out of the 48 junior market stocks are trading below their IPO price. For context, this is for companies in the junior market are still listed in the junior market. So your Lasco Financial and your Lasco Manufacturing Distributors are there in the main market, but they're trading well above IPO price. We would have seen R. Williams listed in the junior market last Wednesday, down 10% on listing day, trading already as low as 66 cents. It's now trading between 75 and 84 cents, today, but persons that are bought in IPO at $1, we're looking at least 16%, loss, either realized or unrealized just off the bat like that. So I say that very cautious to point out that if an IPO comes out, it cannot just be that you're going to buy and say, hey, when it lists, I'll sell for probably 10, 20%, and make a food. You have to be very circumspect and be very cautious. So earlier, Julia mentioned, if you're seeing increasing volumes, that can be, a good sign, on sentiment turning. But at the same time, you have to be cautious because not every IPO is going to perform like we saw in the past period until you see liquidity and confidence in the market and a little more stability at the same time. Now, with respect to returns on fixed income, I don't mind. What do I mean by that? So even the other day, I bought, one of the maybe bonds are listed on the JSC at $90. The maturity price is $100. So just by me holding between now and January, I'm looking at, an easy unrealized gain of probably about 11% before fees and everything else. There was a preference share I bought, US dollar one, JMB one, $64, hold to maturity by March. I'm looking at 22% unrealized, 22% realized gain just by holding in US dollar terms. So what I'm pointing out is that yes, you do have, these fixed income instruments, but I'm also pointing out, the IPO buzz that, hey, return is guaranteed. It's never, nothing investing is guaranteed. At the same time, there are other ways to, gain some stable earnings in this market. So for example, we would have seen, Dolphin Cove return to some semblance of its attention to the quarterly dividend, increase. And, we're seeing there one of the highest dividend stocks right now, along with TGH and Carreras. And, some preference shares right now, some are being sold pretty cheaply, below their maturity price. So even the other day, I missed this. I was saying someone day in terms of, an engagement, but to keep context, FLE 7.25 in a trade that I believe 15.14. Why is that so important? The reason why is the maturity price is $20. When I did the math between the dividends over the next 2 years alongside on the gain to be realized by holding to maturity, that's to be about 50% in Jamaican dollar terms. So we just buy this preference share, company just goes forward, grows, pays maturity, pays the dividends, tax free as well, and you got your stable return. So there are persons, who understand the market a little better and are making pretty consistent, monthly gains. But for other persons, it's probably just best to look at probably a bond, look at a preference share or something else where your return is really dependent on the company, continuing to serve and do what it needs to do, but also buying at a price that is cheap enough such that the realized gain that you get from holding it or potentially selling it makes a lot of sense.
I'll take this last one from Sean for Leo. Do you think Nigel leaving as Minister of Finance will cause any negative effects to growth in the market?
I don't think so. I think what he has done at the at the Ministry of Finance. I think he's left a playbook and a way of doing things that I think capable hands come in, they should be able to take it and continue on with the work. So I don't really think it will have a negative effect per se. I think where the economies are now, yes, we're not a developed country yet, right? We're nowhere near that. However, I think the trajectory that it's on right now, it's in a position where it can be managed fairly reasonably well by someone that just have capable hands, and also someone that sees the sacrifices and things that have been done before, and basically just continue on that path. I think it will be fine. Again, capable hands necessary, because at the end of the day, yes, he's leaving. However, we have an election due soon. There's a possibility that another party comes into power, the opposition comes into power, and then definitely you're gonna have a change in the finance. So either way, there's a chance of it happening either way. So all we really want, and I think it's something that is fairly reasonable, meaning that there's a lot of capable persons of doing it that can just take what's there, see the path that's been set, and they can improve upon it, or they can just follow that path. Because I think a lot of work has been done, a lot of foundations has been laid, that I think we can be in some strong positions going forward.
All right. Well, thank you so much, guys. I
Yeah, man.
appreciate your input on all these questions. This was a very lively session. Thanks, David. Thanks, Leo. Thanks, Julian. Nice
Yeah, man.
shirt, by the way,
Good
Julian.
night, everyone.
You're repping the Wealth Watch JA brand. Is it wealthwatchja.com?
Yeah, it's WealthWatch JA, but some changes coming soon. Still WealthWatch, but I'm just going to make some adjustments. So this might be the last time I wear it, or second to last time.
All right. Well, we'll look out for the changes when they come. We'll take our final break and come back with your comments, and there are a lot of them.
This segment of Taking Stock, The Analysts, was brought to you by JMMB Group, your best interest at heart.
I'm Kalila Reynolds, the Money General, and I'm on a mission to help you get better with money. Join me inside the Money Mission community, where I'll teach you how to manage money, make more money, and annihilate bad debt. Click the link in the description to sign up for your basic or premium membership. Let's get this money. Welcome back. Let's see what you guys have to say. A lot of comments in the chat. Sean's regarding that conversation about redeveloping downtown and whether it is a good place to invest right now. Sean wants to know, why can't we move away from Kingston? Why is Jamaica so centralized to Kingston? It's the capital. Not only is it the political capital, it is also the financial capital of the island, and that cements its importance. We also have the harbor. We also have one of the main airports. So it is the commercial capital of the country, and that solidifies its importance to the entire island of Jamaica. Stronglink says, is downtown a city area that would be under threat from global warming with rising oceans in the next decade? That is a significant concern, Stronglink. I don't know what the climatologists have to say, but we have seen what has happened in areas like Helsha, along the coast in Portmore. Does downtown Kingston face a significant threat as well? It's a discussion we may need to have another day. Roswell says, so how do any business persons want to develop downtown Kingston, create a nice eco environment for persons who want to go and buy, shop, etc.? Good question. I think that is the challenge that we've been having over the past several decades for all these subsequent and successive administrations who have wanted to develop downtown Kingston into a vibrant downtown, have just had the challenge. And I think crime has a big part to do with that. Crime, and also just the general culture and the atmosphere of what downtown is currently. Lanesra says a lot of money into bonds. When most start maturing, maybe by then we will see a big shift in equity market prices going up. I think that is the expectation right now. And so people are putting their money into bonds, and we're seeing the maturity dates coming 12 months, 18 months, 2 years. And the hope is that by the time those bonds mature, indeed, the equities markets will start to rise. However, like we've also been saying, the time to invest in equities is when they're low. So should your money be going into the safe bet bonds right now? It depends on your risk profile, depends on your risk tolerance. If you want to play it safe, go into bonds. If you're willing to take that risk and bet that within the next 18 to 24 months, the equities markets will return in a very strong way, then put your positions into equities right now. Paper Plate says the education sector needs a complete overhaul. A lot can be said about that. Sean says the teachers need better training. I had a math teacher in university who made math a breeze, while in high school it was painful. That plus too many households live in poverty and can't provide for their children. That is the absolute truth. That is a fact, because the truth is the people who are best at math aren't becoming teachers. They're going into other higher paying professions for the most part. There are those, of course, who go into the teaching profession because they absolutely love it. They love teaching math, they love teaching science, etc. But I believe it's safe to generally say that the best and brightest don't become teachers. Not knocking teachers. We do have some amazing teachers out there. I come from a long line of educators, but those who have other opportunities tend to go into other areas, not so much teaching. Roswell says, if America slowed down in doing some level of business with Jamaica, it would be a cause for concern. No need then to be concerned. Read the American dollar versus BRICS. Stronglink says, IPO mania done. I warned people about getting burnt by the buzz. Fundamentals and patience, dear Watson. Last IPO, Aria Williams, is definitely proof of that. You can no longer guarantee a quick flip from an IPO. That is not where the market is right now. Roswell says market has surely changed on the IPO, not like 2019, not at all. Learn, Grow, Invest says for dividend stocks, be sure to check the yield. Absolutely. Tavares says cartel don't need much energy to perform. That's true. For a concert such as this, he probably just needs to sing the first couple of lines and hold the mic to the audience and let them finish. With a good band and a good DJ and some good dancers, they probably can pull off a show. You're probably right. Lanez wants to know, can he perform for an hour? Well, like Tavares just said, maybe he doesn't need to. Would that satisfy you all? Strong Link says inflation might get licked due to beryl. It surely will. We've already begun seeing the impact of the prices, the scarcity in certain food items, the cost of tomatoes right now and sweet pepper, if you can even find those items. So absolutely, when those inflation numbers come out in September and October, we're going to see the evidence of what we have been experiencing for the past month and a half, and so on. Let me see if we have any other comments here that I want to take. Orville want to know, are there any plans for financial institutions to start offering digital assets such as Bitcoin and other crypto assets? You mean financial institutions in Jamaica who are very, very conservative? I would be surprised if they do. I am not aware of any who are planning to offer those particular types of investments. And if there are, they certainly are not among the traditional crop of financial institutions that we typically do business with or typically are aware of. So I don't know if they are, but I doubt it. Let me see who else we have here. Strong Link says no. Oh, Garvin says we need AI. Oh, something got in my eye. We need AI to help teachers or do the teaching completely. The world may be heading there. Ooh, do the teaching completely? So who's going to ensure discipline in the classroom? Who's going to ensure that the kids actually learn? I think AI can help a lot, like in setting the test questions and discussion questions, but I do think that we still need physical teachers to provide guidance in the classroom. Teachers make a difference. That's my belief anyway. All right, so let's leave it there for this evening. Thank you guys so much for joining us yet another week. If you were at Money Mission last night, Money Mentorship, we had an awesome time with a group of, we had mostly entrepreneurs last night, which was pretty fun. Next week, coming up in Money Mission, we have the Build Your Budget workshop. It is a free workshop called 5 Budgeting Mistakes and how you can fix them, what you can do to fix them. It's going to be taking place at 7 p.m. September 9 inside Money Mission. So make sure that you sign up. There is a link in the description box, or you can just sign up to the newsletter at KalilaReynolds.com/newsletter. I think an easier way to remember is getmoneynews.com. Go to getmoneynews.com to sign up to the newsletter. That way you get all the updates. Or if you are on YouTube or Facebook right now, you can look in the description box for the link to sign up directly for the webinar. Otherwise, just go to getmoneynews.com to sign up to the newsletter, which will later on give you access to the webinar. And I hope to see you on Monday inside the community. We got to talk about budgeting. It's one of the questions that people ask me about the most, especially right now because it's back to school season and people are trying to figure out how to make the rest of the money stretch through September. Christmas is coming up, another season that we need to have our budgets in place for. New Year's is coming up, another time when people start thinking about planning their financial future and their financial year. So we're going to be talking about it inside the community on Monday. Go to getmoneynews.com or go to the link that's in the description box. Thank you to our analyst panel for this evening, Leovani Dillon, Julian Morrison, and David Rose. They did a brilliant job, as usual. I like doing the Ask the Analyst. We get the non-traditional questions out there that we don't typically get to hear their views on various topics in the investing world. So we need to do it more often. Let me know in the comments as well, who would you like to see on the show? Couple of things that we've been working on. Finance Minister Nigel Clark, of course. I have a million questions for him about his role or his upcoming role at the IMF. What difference does he think he will make, if any? Because here's the thing, right? A lot of people have been asking, how will Nigel going to the IMF benefit Jamaica? But in truth, I hope that it doesn't benefit Jamaica. Because if it benefits Jamaica, that means that we are going back to the IMF. And I hope we never have to go back to the IMF. And so I see his role there as having a global influence, especially on behalf of other developing countries that may need assistance. So I want to talk about that. I want to talk about what he thinks his legacy here is going to be. What is his proudest accomplishment? What does he think he would still like to see improve? Many, many things. Is he abandoning Jamaica, as some people have said? And so on and so forth. So Minister Clark, if you're listening, we still want to get you on the show. We were hoping to have him tonight, but it didn't quite work out. Another show that we're trying to get as well, we've been trying to get United Oil and Gas on the show. A couple weeks ago, that was all over social media, that 7 billion barrels of oil had been discovered. United Oil had a press conference. Actually, it was an investor briefing in Britain in July, which led to all kinds of speculation and things being taken out of context. But I want to point out as well that that was, what was it? An investor briefing, meaning it was an event designed to attract investments in the exploration efforts in Jamaica. So, of course, they're going to present a very optimistic case for 7 billion barrels of oil potentially in Jamaica, because they're trying to get people to invest in their exploration efforts to dig the wells to actually find and then extract the oil. So we're trying to get United Oil and Gas on the show. If anybody has a link, let us know. Another show that we've been trying another guest that we've been trying to get for a few months now as well is Juicy Patties. You see that they've been franchising in Florida and they have further plans for expansion. We'd love to talk to them about how it's been going so far. I just saw a post from them that they've opened their 5th franchise in Florida. And I want to hear how it's been going. What are the expansion plans? Any other areas of interest? And, just Juicy's origin story in general. If you guys have any ideas for the show, let me know in the chat. What would you love to see us discuss on this show? And what would you like us to talk about in Money Mission as well? Let me know in the comments. So that's our show for this evening. Thank you so much to our hardworking production team, led tonight by the capable Sachelle Williams and Oreen Thomas and Izzy Ramsey and Anthony, last name again. Oh gosh, how could I forget? Yes, and the entire production team, Kevon Brown, everybody who's been working. Oh,
his last name is Morgan.
Morgan. How could I forget Anthony's last name? And he's been with us so long. Yeah, Anthony Morgan, Kevon Brown, who's been working on our new website, which should be launched any day now. Actually, it's almost ready for launch. moneymissionja.com. Redesign is coming soon. And just the whole team, big up on itself. Thank you guys for watching yet another week. I enjoy your presence. Share this video with a friend. Remember to like it as well. It helps with the algorithm. Subscribe to the channel. It also helps with the algorithm. And let other people know that this is the place to come for money news in the Caribbean. I'm Kalila Reynolds. Until next week, let's get this money. See ya.
This segment of Taking Stock, The Analysts, was brought to you by JMMB Group.
Let's get this money.